Anybody out there with the underwhelming take, I just think is going to look like an idiot. My theory on that is the underwhelmers are one of two people. It's the when moon degenerates who just can't wait a couple weeks. They just need like 10% every day. And they're not accounting for the fact that Bitcoin went up 60% in the lead up to this. You kind of have to factor that into the whole thing. You're still up, 80% in a year, even with the sort of sell-off. You got to look at it that way. In the stock market, people front run the Fed all the time. It's normal, and they sell the Fed news. So that's part of it. The other thing is you got to maybe chill a little. You're up 80% even with the sell-off. You've doubled the Qs, and the Qs had its best year since the 90s. So there is a little bit of high expectations from some of the crypto people. They need to chill. Now, on the flip side, you've got some of the more traditional finance people who really don't like Bitcoin. It's against their worldview. They don't like the crypto bros. They just don't like it. And I think they use the ETF launch. They think, I've got a little stick here to beat the crypto people over the head with. This will be fun. And they're like, this was underwhelming. This launch wasn't as good as people thought. Their motive is not pure. It's to troll crypto. The problem with that is that they're going to look like idiots in a couple months. I'm telling you, as somebody who's seen thousands of ETFs launch and has seen this industry defy odds all the time, the ETFs are powerful. They're disruptive. They gather assets. This is where all the fish are biting. All the advisors love ETFs. So the problem with them using the ETF stick is they're using the wrong stick. ETFs are going to prove them wrong. They should just come out and say, I hate crypto. Fine, that's a different argument. But to use the ETF as lack of success, you will be proven wrong. And in fact, again, all the data I said, I think you are wrong in 2 weeks. But just give it a couple months. They're going to look really dumb.
Bitcoin's price is rocketing up and spot Bitcoin ETFs are seeing record net flows. If this trend continues, we could witness a parabolic rise in prices. That is the latest prediction from Bloomberg ETF analyst Eric Balchunas. In his latest interview, Eric spoke on the massive net flows into the Bitcoin ETFs, showing unprecedented investor interest. This reveals the growing significance of Bitcoin ETFs in institutional investment portfolios. Furthermore, Balchunas discussed who stands to benefit most from the spot Bitcoin ETFs. Make sure to stick around to the end of the video where Eric reveals how the Bitcoin ETFs could overtake Gold ETFs in under 2 years. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Eric Balchunas and why he's incredibly bullish on Bitcoin.
Let's say Larry Fink lost his mind. Or we didn't know that BlackRock was going bankrupt, that BlackRock could go bankrupt, those receipts would still translate to that custodian. That's called being transferable. And so ETFs are kind of SBF proof, and which is why we wanted them approved from the beginning. But furthermore, Larry Fink just doesn't have the same brain as a young SBF, different mindsets. And so in a way, the adults are here. This is an adult operation, very serious. So I try to tell people you have nothing to worry about. Now they say, well, what about the government confiscating the Bitcoin? Now that's a whole different story. Would BlackRock work with the government? Maybe. And that I get. And Goldbugs used to bring up FDR confiscating the gold in the 20s. And to that I say, well, you should own your own Bitcoin then. This ETF is not for you. You're at another level, and certain gold bugs are like that too. They should own a gold, get a safe, store it. There's even a gold ETF actually that stores the Bitcoin in Switzerland to appeal to the people who are worried about the U.S. and the West doing that. So we could have some kind of an alternative storage facility for Bitcoin. But at the end of the day, if you're that, I wouldn't say paranoid because it did happen, but if you're that worried, you should just get your own Bitcoin. No problem there. And I'm an ETF. I'm obviously a big ETF advocate, but I'd be like, just do it yourself. Yeah, and this brings up the two cases for Bitcoin, right? One is the government is not to be trusted. The currencies are going to hell, and we could end up in like a Mad Max post-apocalyptic thing where there's dirt roads, and whoever has Bitcoin actually can get goods and services. In that scenario, you got to own the Bitcoin, because that's the whole point. The other case is that, hey, it's just this cool new digital gold. It's a store of value, and it will help diversify and add some returns to your portfolio. That is, you just use the fund or the ETF. There's no worries there. So it depends on where you're coming from, which makes this such an interesting asset class because you could go from, hey, it's cool, to like literally Mad Max and everything in between. And the more you get to Mad Max, the more you have to buy it, because otherwise, if we're end up in some kind of Mad Max world, the Bitcoin itself would be needed for this as the currency. But in a store of value world where society remains fine, it doesn't matter. Just use the ETF. Who cares? It's a pain to store it. Just outsource it. If you isolate the newborn 9 away from GBTC, anyone and their mother would be like, holy moly. I mean, it's literally the most successful launch of all time. I mean, let's say there's 20 stats you could use. This would be 15. It would be number 1 on 15 categories. Even the press attention, the flows. We're looking at I think we're up to $7 billion in assets from the newborn 9. That's ridiculous for 2 weeks. Ridiculous. It doesn't never happens. And the volume's ridiculous. It's not just like one big investor put in $2 billion and then that's it, which happened to a couple ESG ETFs a few years back. This is real organic volume and growth. Where it all gets kind of weird is GBTC converted and it was an unlock, and they immediately saw a couple billion out, and they see 100 million or 2 every day now. But the newborn 9 have taken in about 1.5 billion more than GBTC has seen in outflows.
Wow.
So even if we isolate the 1.5 billion and we say, let's pretend a new Bitcoin ETF launched and it got 1.5 billion in 2 weeks, again, that's a big hit. That's more than BITO had, and it's more than GLD had in 2 weeks. So I don't know what metric you would look at to think this sucks. The other thing is the GBTC outflows. People are saying, okay, it's 1.5 billion net. But I don't think you should compare it to all the GBTC outflows, because FTX was $1 billion and that money just left immediately. That's not really part of this. That's money that left. And then the people who arbed the discount, the prop desks, They weren't really Bitcoin people. They were arbing that and they're gone. So I'd say only 1/3 of GBTC is actually money that is in play to go in the other ETFs, like people who are leaving to go to those. So you really should look at the net new demand as more like 4 billion of the 5, in my opinion, because the base of GBTC is complicated. A lot of that money came out just for non-investing reasons. It was a trade or a FTX legal thing. And so that's why this whole thing gets a little weird, is that. But it doesn't even matter. Even if it was flat, if it was like they offset, just wait. The momentum these things have early on is very positive. And you know, the BlackRock's got advertising campaigns. Larry Fink is out there saying this is a new asset class. Fidelity is involved. I mean, that's all you have to do, is just sort of trust behind these people who have strong reputations for successful products. Give it time. And these products already have 2 things that you need for foundational ETF category growth: volume and low fees. Those are the 2 most important things for the fish to come bite. So institutions like volume, advisors like low fees, and they each both like some of the other. They have both in spades. So the stage is set. The wholesalers are going to do their thing, and just wait. So BlackRock's more like, look, it's okay now. It's safe. The bad millennials who wear shorts and can't run a business, they're gone. We're here. The adults have arrived. That's generally, it's access. It's safe. It's access. So it's a very clean message to the boomers and Gen X's. The smaller issuers are being a little edgier. They're saying we're crypto specialists, unlike these Wall Street opportunists. So they're each going to, I think, find their audience. There'll probably be some people who, one advisor we talked to on our podcast said he used Bitwise because they did donate some back. They were more crypto specialists. And he's a fan of BlackRock otherwise, so they peeled him off. ARK and Cathie Wood has been a bull for a long time. Some people might just reward her for being so bullish this whole time. Fidelity has a massive distribution, so I don't think they've done any advertising. They've got like all these wealth managers all across America who manage boomer money, and so all they got to do is put a little of the portfolio into this, and they have flows just like that. So that's sort of how it'll play out. I think the marketing will be varying. I think the more bigger the firm, the more conservative the marketing will get. Franklin went a little wild, putting laser eyes on Ben Franklin and stuff. That's a weird one. So the problem with that, I get it, it's fun, and I like the Twitter takeover. Like in general, these big companies need to lighten up. They have too many compliance officers. They're too afraid to say anything. Even their stock picker people, if you meet them in person, they're animated, they're cool, they can't say anything. They just need to lighten up in general. But the laser eyes, almost too far the other way, I think. The base of Franklin, just anyone who would think laser eyes are cool is going to get crypto on their own or already has it.
Right.
So I think BlackRock probably has the right approach, which is, look, our audience, you guys probably watched this from afar. You saw all these knuckleheads do all this weird stuff, but it kept coming back. It kept coming back, and you're intrigued. Well, if you're thinking about it, it's okay now. It's safe. We're here. If you own Bitcoin, you're probably one benefactor, right? Because an ETF is a portal, and through the portal, more people can buy it, and that should help long-term investors. That's one. Number two, I think the firms that put one out, they're going to have some revenue products. The BlackRock's case is a win-win for them. They're like, look, we can get a revenue generator, yet we can also disrupt because we can say we're cheaper than Coinbase and we trade cheaper, and it's actually we're disintermediating while making a little money. So that's a good opportunity for them. So I think the issuers would win for sure. The market makers win a little. I think the system certainly wins a little here because to outsource this is a pain. Anytime you want to outsource something, the middlemen are going to make some money off of it. So the good news is compared to what FTX was doing, advertising, they had patches on baseball umpires and places they shouldn't even be advertising. There was like the NBA stadiums were being completely bought off by the crypto, and I was like, that's weird. You won't see that kind of like insane intermediary gouging. The ETF industry is clean and it's lean. So yes, these issuers make some money, but they're going to make a lot less than the SBF types who lost their minds and charged a ton as the middle people. These are professionally good middle people. They're going to do a better job, but in the end, the loser, in my opinion, is probably some of the crypto intermediaries, the Coinbase commissions. That said, Matt Hogan argues that because the ETF will bring in more people, the pie will grow in general, and Coinbase can do other businesses like custodian and whatnot. But so I think it's probably a mixed bag for them. But I do know if you have high commissions, you're in trouble. I mean, ETF trades at a 1 basis point spread. And with those, I think the expense ratio is really good. I thought it would take 2 or 3 years for the fee war to get it down to 25 basis points. I thought it'd be 50 right now. But that's amazing. And the ones on the market that we knew about in Canada, they're all over 1%. Yeah. BITO here was 95 basis points. GBTC was 2. So now you have a better version, 4 times cheaper. It's good. So even though I say the asset managers will win, it's not a lot of winning compared to some other areas of Wall Street that are just ridiculously, make so much money for what they do. This is a fair way to win, in my opinion. Again, if your prediction on price doesn't include the run-up, right, I can't talk to you. Like because there were some God candles on the way to the spot. Remember when the Cointelegraph intern said BlackRock's approved and that turned out to be a lie and it went up 5%? Yeah. It never went back down. Like it didn't go down because the rumor was so you got to count those little nice moments. You have to factor all that in and realize that hedge funds and traders thought, oh, this is an opportunity to buy a rumor and sell the news. So I think when you get rid of the selling the news, I don't know, in terms of price targets, there's a lot out there. I'll go with what we can predict, which is our flows. Flows are important because they're just pure money going in that wasn't there. Assets can go up or down because of flows plus market appreciation. So I don't know where assets will be. It'll depend on where Bitcoin is. But flows, there's been, we'll say, 1.5 billion net, and then total 7 billion into the newborn 9. So I'll just go with the 1.5. What net will we see by the end of the year? I'm saying 10 to 15 billion. Again, that's pretty good, especially relative to the size of Bitcoin.
Yeah. So there's Eric Balchunas simplifying the recent surge in the Bitcoin ETFs and what it means for regular investors like us. His insights shed light on how these ETFs might hold up even if big players like Vanguard or BlackRock face trouble. Moreover, he breaks down who could benefit the most from these spot Bitcoin ETFs, helping us see how they fit into our investment strategies. With Balchunas' expertise, we gain a clearer picture of how to navigate the sometimes daunting landscape of crypto and make informed decisions about our money. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin, consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis trusted by over 50,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.